Earnings season, sir, is on. Infosys, which by the way has a 7.5% weightage on Nifty, had another difficult quarter. Revenue and margins dipped quarter on quarter. Profits jumped by about 30%, but that was on the back of a big jump in your other income component. Also, the guidance coming in from the management is not inspiring, right? FY 25 revenue guidance is seen at 1 to 3%. Operating margin is kept unchanged at 20 to 22%. But Kush, coming back to you, the ADR last night that cracked by about 7.5% in the pre-opening on the NYSE. It settled about 2.5% lower. Here it's down about 2%, but that's also in a falling market. But very interestingly, we are at the lowest level on Infosys since November, and approaching that 1350 odd zone from where that big rally took off. Is that a big support you're tracking on Infosys?
So look, two things here. One, from a technical standpoint, 1350 will remain, a strong support zone, because it's not only, in the November, October of last year, but also if I, dial back the clock a little, then March 2023, and then before that, September 2022. Multiple times the stock has rebounded, from those levels. So from a technical standpoint, it is for sure a very strong support zone. My concern, however, is around the recent trend. If you see, most of the IT names have been under a bit of pressure. On the falling side, the volumes have actually peaked. So perhaps, once we reach that 1350 level, the stock could also enter the oversold territory and perhaps see some sort of a rebound. But on the whole, the trajectory looks south. And not just for Infosys. If you look at the other three names, the other three big names, TCS, HCL, and Wipro, here too the trajectory is actually not so encouraging. So, as I was mentioning to someone in a conversation, that in the IT, for these four names, I'm ranking stocks in the order of, which is the less, damaging one, right? So TCS perhaps tops the list, where it's the least damaging one. So if you want to invest in the big names, TCS from a capital standpoint perhaps might stand out, but I don't expect a big momentum there too. Infosys, HCL Tech, Wipro, all three stocks have been under a bit of a pressure and might continue to remain, even if you consider the economic situation, especially in the US. So for me, this sector for now is an avoid. If you have to allot fresh capital, I would say wait for some time. There are other spaces where you can, deploy that capital. So Infosys, TCS, and that remains the theme for a lot of fund managers also. So that's why you might see some sort of an ongoing pressure on these stocks.
All right, and interesting that you picked TCS as perhaps the safest of the stocks to play at, because in the last 1 month it has declined by about 3%, whereas Infosys, HCL Tech, Wipro are down about 8 to 10%. I mean, it has not delivered tremendous returns over a 1 year period, but it has been a rather safe bet as far as IT stocks are concerned.